Welcome back to Wall Street Moment. Well, if the first trading week of 2018 is an indication, things look promising. Many Wall Street experts are predicting another solid year for U.S. stocks in 2018, as well as other sectors. So increased economic growth brings increased demand, and commodities such as oil and metals could rise, along with agriculture products and materials. So if this trend continues, that could push the Federal Reserve to raise interest rates more aggressively than investors might like. So for today's showtime, we have two guests from CME. In the first week of 2018, in order to look forward, we need first know where we are coming from, as we talked yesterday. So tell us what surprised you most in 2017 markets, and when's the moment that you think that impact the market most?
Well, obviously the market had a really good year in 2017, so we're coming into 2018 with upside momentum. Certainly the first 2 days of the year has indicated that momentum is still there. Everyone has a very, very positive read on the fact that the economy was doing pretty good and it was going to be doing even better because of the policy changes in Washington. If that turns out to be the case, I think we're going to have a very good year this year. If it doesn't turn out to be the case, or if we don't get the boost we had sought, like for instance, right now, the GDP now in Atlanta's Fed is basically saying that we're going to have a similar decrease in the first quarter as we've had the last several years. If that's the case, then obviously people might get a little bit disappointed and they might say, okay, these policy decisions in Washington may not be working. I think that's the first fear of the market. The next fear of the market is I think that interest rates could substantially go up this year. If that is the case, I think that's the real fear of the market, because I think you're going to see a lot of people that are in high yield instruments that are going to actually start taking losses. And most investors really haven't had any sort of sustained loss in any product for almost a decade here. So if we do actually see that, how the market reacts is going to be a very interesting thing, because it could snowball. I'm not saying it will, but I'd like to see how people react to an actual correction in the market. And it could actually get a little bit out of control, because valuations are stretched pretty much across the board.
Next, let's see commodity market for crude oil. Oil prices post their strongest opening to a year since 2017 at the beginning of this week. So it's more about growing unrest in Iran that set the table for a bullish start.
Yeah, I think we were had some pretty good legs under this rally leading into this. Of course, the situation in Iran has potential to become serious, so therefore it does certainly warrant watching. I think that crude oil looks like it's poised to test the $65 barrel level in the first quarter of this year. I think it's going to have trouble above that, but certainly the Iranian situation merits attention, and if it were to escalate further, I believe it would impact supplies, which we're already seeing in the term structure of the West Texas curve already.
How far will concerns over unrest in Iran would keep prices hanging now of 60?
Well, certainly the unrest in Iran has actually helped the price of oil, but also today we've also had a lot of very, very cold weather in the Northwest. We had a peak demand for natural gas yesterday, as well as we have some oil-fired electrical generation that we only use for a couple days a year, where they're using it today. So our demand is spiking, but the unrest is kind of important here, because Iran has actually been one of the few countries that is actually exporting more year over year, and if that actually spreads and actually gets in the way of their production, this could be a very meaningful. But right now it doesn't seem to be getting in the way, and it seems to be settling down. So I think it was a short-term boost. It's going to have to get worse for it to stay, though.
Analysis opinion goes like even without the unrest in Iran, which is a major oil exporter, market sentiment was bullish. So what's your view on the falling inventories globally and the strong economic growth? Will that continue?
Yeah, when you look at the term structure, and I'll use West Texas again, where you have contango, where the nearby prices are trading at a premium to deferred prices, that does show you there's a little supply concern. So I think the strength of the global economy, number one, has put some good solid legs under this rally. And secondly, I think the lack of investment because of lower prices, and in particular in the OPEC region, I think has really set the stage for this supply demand to come into balance, actually favoring demand at this stage. So yes, the market did have legs before the Iranian situation, and I think fundamentally it still is on solid ground, and I look for the $57, $58 to contain prices for at least the next several months before we do, I believe, ultimately test $65.
Then what's your focus on short-term oil prices?
Yeah, short-term oil prices I think are going to trade. We're going to have a little bit of problem. I think 61, 61 and a half will back up. But I think any rally, and we're going to move this demand line higher. Right now I think it's at 57.50 is my demand line, or support line is what I would call it. And I think we're going to trade up, and perhaps the longer we stay above 60, the more the demand line is going to move up. So I think we're in the upper 50s, sheer solid good support. And I think in the 62, 63 intermediate term, and 65 I think is a good long-term target for this year, because at that point you're going to get a lot of shale supply coming on the market as well, I think, to limit any further gain.
Then what's your prediction on the oil prices range in the first half of 2018?
In the first half of 2018, I think that we're probably going to be seeing somewhere in the neighborhood of 55 to 65 range. I think we're kind of at the upper end of it right now because we're seeing increased demand, as I mentioned earlier, and you're also seeing potential supply disruptions in some of the geopolitical events that are going on. So I think we're probably reaching the higher end of that. Certainly have a couple more dollars to the upside if the weather situation doesn't improve or the Iran situation gets worse. But on the other hand, I think that we are going to see increased production. So by the end of we're going to be in the mid-50s by the middle of the year.
Next for good market, from the relative strength index, it shows gold at overbought levels, which may lead to short-term selling. So will you take the same view, and what's your prediction on the gold trend?
Well, gold was stagnant pretty much all of last year, and in the last month it had a pretty amazing move up. I mean, it moved up, quite a bit, and we have a situation here where is that, obviously the relationship with interest rates and inflation is really what's going to be the key here. Lately, the dollar selling off certainly has been supportive to gold. We are in a situation here where inflation is starting to pick up. I mean, it's certainly not in what the Fed reads. The PCE isn't really moving. But if you look at the 10-year and the 30-year bonds compared to the tips, both of those are 2% or better. So, I mean, the market is starting to anticipate a longer-term increase in inflation, and that certainly is supportive for gold. But the gold has had a pretty good run, and they're going to actually need to see some other supportive data in order for it to keep going. So, I mean, at this level here, I mean, maybe another $10, $20 to the upside, but then I wouldn't want old gold.
What could be the most important factors that investors should take a focus on in the beginning of 2018, the stock market as well as other sectors?
I think in the rotation right now into small cap value in the U.S., I think makes sense. I think that anything sensitive to interest rates does not make sense, and that would be utilities. So I think we're looking at the Trump trade post the election in 2016. Those are the trades. So you want financials. I believe you want materials, because I do believe we're seeing an expansion. So I think you want an inflationary trade. I think you want to stay away from interest-sensitive stocks, because I do think interest rates are going to rise. And I also love industrial metals, and in particular silver.
Last but not least, we have to take a look on Bitcoin. Bitcoin took a wide ride in 2017 with the launch of the CME CBOE Bitcoin futures contract and more traditional institution investors accepting Bitcoin. So if you make a conclusion on the 2017 Bitcoin and a forecast on 2018 Bitcoin, so what could it be?
I think 25,000, and why I will say 25,000 is that I don't think this is a flash in the pan. I think that the cryptocurrencies have some legitimacy. Of course, there's always certain events that merit consideration in that area. I think the blockchain accounting is very real, but most importantly, I think that 5% of the gold demand, I believe, into Bitcoin would probably translate, at least by my calculation, to 25,000. So I think Bitcoin probably is who knows where it goes short term, but I do think that was not a flash in the pan, and I think there's probably a good quantitative reason for it to trade to 25,000.
Thanks you too, and thank you all the viewers for watching us. See you tomorrow.